morning. Great to see all of you here today. My name is Janice Musselwhite. I've been with Gabelli about 20 years. And on behalf of all of us at Gabelli Funds, we've been privileged to partner with Morningstar for more than 25 years and to be a principal sponsor at the conference again this year. It's my pleasure to introduce my colleague, Tony Bancroft, Lieutenant Colonel Tony Bancroft, United States Marine Corps Reserve, who joined the firm in 2009 as an associate in the Alternative Investments Division. He's currently a senior analyst and portfolio manager covering the aerospace and defense and environmental services sectors. He's a co-portfolio manager on one of our flagship mutual funds, the Gabelli Dividend and Income Trust, and a portfolio manager of our commercial aerospace and defense actively managed ETF, GCAD. Tony graduated with distinction from the United States Naval Academy with a BS in Systems Engineering and holds an MBA in Finance and Economics from Columbia Business School. With that, I'll turn it over to Tony.
Thank you, Janice. Welcome, everyone. Thanks for having me here. I just want to briefly go through a couple slides. We can just talk about the overview of the industry, and then we'll jump right into Q&A. I think it'd be more informative if you guys could ask some questions. I'm sure there's a lot out there with this industry. So that's me. I manage the GCAD ETF, Gabelli Commercial Aerospace and Defense ETF. So I think I'll just start off maybe quickly with why we like the aerospace and defense industry. And I think this slide probably sums it up. This is essentially Boeing's outlook on the commercial market over the next 20 years. You can see here that there needs to be about 42,000 new aircraft to be delivered in order to service the global fleet that's growing, and it's growing faster, quite a bit faster than global GDP. Commercial travel on a revenue mile basis is growing about almost 5% over the last 20 years, and it's still above world GDP growth at about 4+%. So that's a lot of planes, right? Right now, the global fleets is almost just half, or a little more than half of that. And a lot of the companies that we obviously invest in and cover, they play in this area. So, last 20 years, what do we have? We had planes like the Airbus 320 and the Boeing 737. That's the NG previous to the 737 MAX. The next 20 years, you're going to see new planes with new technology, planes like the Airbus 350 and the 787. They are all carbon fiber planes. That whole fuselage is made of carbon for the most part, and very, very fuel efficient engines, high compression ratios. And so in the near term, what's sort of driving, and what are the catalysts in the near term? I like to say is sort of the three Bs. You have Beijing. Obviously, China is going to be a large buyer of commercial planes. They're about 20% of the growth of that 42,000 planes we're talking about will go to China, and they're going to need them. That emerging economy, the middle class, that 300 million people in India and China that are growing and wanting to travel and have the experiential generation, they're going to want to go and fly and take Instagram photos and put it online. And then business travel. Business travel is recovering still. Obviously, COVID changed a lot of things. But you're starting to see, you probably heard of it, it's called leisure travel. So it's similar, maybe something like this. You come to Morningstar, you'll be here for a couple days, and then you'll turn it into a nice weekend on the beach here along the lake. And lastly, you're seeing that backlog. Right now, there's about a 12-year backlog if you were to combine the two OEMs, Airbus and Boeing, and what their production rates are right now. You essentially have unconstrained demand for these aircraft. So as we talked about, that's about 8,500 planes. At 20% of the deliveries are going to be China. So they'll be a big player there. And then you can just see the resiliency of air travel. This is again from the Boeing's commercial outlook. The last three downturns, 9/11, the Great Financial Crisis, and then you can see COVID. essentially did nothing. Even after those, and COVID being the worst downturn of all time in commercial travel, you see that right now we're almost. This slide is a little antiquated. We're essentially back at 2019 numbers as far as revenue passenger miles. And then maybe back up one. Okay, so we talked about the rising middle class, and then why do we like it? There's economic growth. You're seeing, countries wanting to travel more, build more airports. You see, they talk about China, building 100 airports over the next 40, 50 years. You're seeing deregulation. You're seeing new countries that never you could fly into. Even when I was growing up, there was a bunch of countries you just couldn't go to, right? Obviously, before the Cold War. So all of these long-term secular tailwinds are sort of all frothing up and drive the industry. And then probably one of the biggest, though, is a low-cost carrier model. And I know there have been near-term dynamics with that, but globally, that's actually a huge factor. People actually having access to flying, and only 20% of the world has actually ever been on a plane. So you can imagine as the economy grows and the world grows and wants to see more of the world, they're going to need air travel. So back to that slide, that's sort of where it gets us now, and then we just can quickly go through these. This is essentially how the fleet's broken down. Of that growth, most of it's going to be the narrow body, the 737 MAX and the Airbus A320. These are the backlogs, essentially a decade plus of backlogs from both of the operators. And then we'll jump right into defense. I just don't want to delay too much more. The other piece of our strategy for GCAD is defense spending. And defense spending, people think about who's in office, Republican, Democrat. That's actually not the issue. It's been statistically shown that it doesn't matter who owns the White House, who runs the White House, who is in charge of Congress. Defense spending is driven on geopolitical volatility. And I think, being a former F-18 pilot and Marine Corps officer, I can think in all of my time in the fleet and deployed, I can't think of a more volatile time in just my study of military history since World War II. So we're going into a volatile time, and if you actually back test defense spending, at least U.S. defense spending, if you were to look at back then how much we were expected to spend, how much the comptroller of the Department of Defense, they were going to grow at about GDP plus. Well, you go back 5 years now, and that's actually a 5% CAGR. So we've actually way outgrown our GDP, global GDP, and our expectations. And going forward, we've got about a 2% outlook on a CAGR on defense spending for the U.S. And all things being equal, I'd guess it'd be a lot more. So, and that's just a slide to sort of discuss that a little bit. And then on the global basis, the U.S. is obviously the mass majority of NATO spending. Just globally, I'll break it down. About $2.2 trillion is global defense spending. Of that, about $1.5 trillion is NATO, or 1.2 trillion. And of that, of course, the U.S. is a lion's share at almost $1 trillion. So NATO has been underspending, and you've probably heard this. This is nothing new. But if NATO were to get to a 2% of GDP target, which is what the mandate is, that'd be an extra about 80 billion of annual spending. That's about a 7% increase in NATO spending on a total basis. And if you were to throw in, and this is more of an order of magnitude, our APAC NATO partners, countries like Japan and countries in the South Pacific that are our partners, if they were to spend at a 2% rate, which almost the rest of the world spends well below the U.S., it'd be another 40 billion. So you could just sort of see order of magnitude what defense spending sort of probably needs to be. And I'll just throw in an example here. We will talk about a lot of stocks hopefully today, but Textron, we own the stock. It's a prime contractor. They just won a very large defense contract to replace the Black Hawk. There's about 4,000 Black Hawk helicopters. They just beat Lockheed Martin for it. And they also make business jets. And on top of that, they make weapon systems for the Department of Defense. we see this as an undervalued stock. The stock trades somewhere in the 80s right now. And if we use our PMV, which I'm probably sure you've heard about over the last day or so coming over to our booth, if we look at it on a PMV basis, someone who'd want to own that, a large OEM, a prime like General Dynamics, we think it'd be worth around about $125 a share. And they're gonna benefit from this this contract to replace the Black Hawk helicopter, because the U.S. needs to pivot to the Pacific, right? We need to go over to China, and we need to deal with these long ranges, because there's not a lot of land in between the U.S., Hawaii, and China. And the helicopter, the aircraft they make is a tilt rotor aircraft. You've probably seen a V-22 Osprey, and essentially that technology won the replacement for the Black Hawk. So that's just one of the examples of one of our defense companies that we own. And now just quickly go over GCAD, our ETF. We've got about 30 holdings, and we've had a good year. We're beating our index this year, up about 11% or so, versus the index at around 5 or so. And that's with our two largest holdings with Boeing and Spirit. And we can talk about this quite a bit more, but why do I like Spirit and Boeing? Well, the end game is there's a duopoly. Spirit is eventually going to be bought by Boeing. And if that's going to be about $1 billion in cost savings, if Boeing is able to successfully integrate Spirit's business into theirs, just taking out obviously the premium that the premium they need to pay in order to buy those fuselages from Spirit. And eventually, Boeing is going to get their story straight, get it worked out, and start increasing the 737 MAX production rates. And the stock really does trade on production rates, right, on deliveries. So long-term, essentially unconstrained demand. It's a very high, very deep moat. There's only 2 operators. They're probably not going to certify a new aircraft for quite some time until there's likely a new technology over the next 15, 20 years. And Boeing and Spirit are going to be Boeing is eventually going to be at the forefront of that. And we've got a couple other names, Moog, which does actuation for aircraft. Hexcel, they make the carbon fiber, which lightweights everything, lighter, faster, stronger. And a company like Ducommun, they make parts for commercial aerospace and defense primes. So in summary, we like commercial aerospace, the growth trajectory that it has. And then defense budgets are probably going to be likely continued volatility, and you're going to need to have defense spending with China, outspending us on a pari passu basis. So with that quick overview, I'm sorry I went through it so quickly. I'd love to go over and discuss any questions you have. So please be my guest. Yes, ma'am.
Test. Okay, wonderful. So can you talk to this kind of movement around unmanned, the U.S. government buying more aircraft that are unmanned and working with those companies? Are they publicly traded, or are you interested in this category as well?
Yes. So we own actually a lot of the companies that we own. Moog, for example, Ducommun, they make parts for either the systems like the Global Hawk. Obviously, Boeing makes that, and the MQ-25, which is essentially refueling the naval refueling unmanned aircraft. Boeing makes that as well. Most of the part suppliers, and that's sort of why we like the suppliers, is because they're almost in every large defense program and commercial program. So you're going to see essentially all the names that I had there have a lot of exposure to unmanned, autonomous, a lot of AI. I mean, people ask me about AI all the time, and defense and commercial aerospace and defense. And the reality is the genesis of AI, right? What makes AI is the integrated circuit, right? That's sort of the baseline of it that allowed the computing power. And what drove the integrated circuit, I'm sure there's some history in NASA space buffs in here, was aerospace, right? So in the Apollo program, They talk about it's the tyranny of the rocket equation, right? Like getting out of the Earth's gravity well, you need a lot of propulsion, and you need something very lightweight. And before the integrated circuit, all there were vacuum tubes, and so the only way to get out of the Earth's gravity well was invent something new, physically new, that could handle the computing power for the Apollo's control computer. And so they went to MIT, and they essentially built those in mass for the Air Force, essentially NASA, and that was the genesis of AI, right? So everything from that, all the closed loop controls. I was a systems major at the Naval Academy, and I was a systems engineer, and all we talked about was AI. We were doing this, and it's all been done. How a missile works, how autonomous works, is all AI driven. And so that wasn't your end of your question, but I think it probably ties into it. There's a lot of autonomy, and then all the next generation stuff, of course, too, with hypersonics. They call it the next generation air dominance aircraft. It's going to be optionally manned. You can put a pilot in there in case we've got issues with cyber and hacking, and you can optionally man it. You can fly it without it. And then even the plane that I told you about, the Textron aircraft that's replacing the Black Hawk. I went and saw the debut of it, the debut flight, and it was fully unmanned. There were two test pilots in there, of course, at the Bell facility down in Fort Worth, Texas, and I saw it doing reverse pirouettes down the runway fully autonomously. And so this technology is there, and it's really going to change. I mean, and what you've seen, I'm sure everyone's watched what's going on in Ukraine, and it's changed warfare. I mean, it's just changed everything, and it's going to continue to do so, probably at a logarithmic rate going forward. So that's a great question. Thank you, ma'am.
Hi, I wanted to ask about Boeing's narrow-body jet. I was curious if you thought there was going to be some sort of replacement on the horizon, but I heard you say 20 years for a new jet. So what's the technology going to look like? What do you see?
That's a great question, and let alone everything you hear about Boeing, the 737. The reality is that everyone's going to leave here today, and everyone that's not local, probably half or more, are going to leave on a 737 or some Boeing aircraft. Right? It's 51% of the FAA fleet. The FAA is a gold standard in transportation safety. It's essentially zero crashes since 2009, the Colgan mishap. So there's been zero deaths from a mishap, an aircraft crash death since 2009, which is a gold standard. There's no other regulator that does that. With that being said, the 737 MAX won't last forever, and with these net carbon zero 2050 regulations that the IATA and the industry has agreed to, probably the only way they're going to be able to do it is two things: sustainable aviation fuel, which is just not enough. There's not enough input to make sustainable aviation fuel. It's like a 12x you'd need of input to actually make that diesel that's considered that type of diesel type heavy fuel that goes into essentially Jet A. And the other thing is going to be technology, right? So historically, you needed like a 15% increase in some type of efficiency, and it was all done via engines, some winglets, how you build the wing, the sharklets winglets you've seen, and the next generation. So that's all been, for the most part, the LEAP engine's been really tricked out. So these kind of closed rotor motors that you see, they have about 11:1 to compression ratio. So essentially taking that much air in, putting a minimum amount of fuel as possible, as lean as possible, and putting as much output as possible, right? That's all it is, the big air compressor. It's just that's all you're doing. So that's the LEAP and the GTF have just been fully maxed out at 11:1 to compression ratio. The next generation is going to be this rise. You've probably seen it. They call it an open rotor platform, and GE is working on it. And it's essentially these huge blades. They're probably twice the diameter, if not more, of a standard narrow body engine, and it looks like a huge propeller, like a lot of propeller blades, but like 100, how many ever there are, 100 of them, and it's got no rotor, so which is a huge amount of drag. So it takes that off, and then now that you have this big wide moment arm, right, which is you're getting way more compression. It's a 75-to-1 compression ratio. So you're going to get a huge increase. We're talking 20 to 25% increase in fuel efficiency. And on top of that, there needs to be a higher wing because these blades are much longer. So you've probably heard of this. It's called the truss-braced wing, right? So it's a much higher wing. It's much longer, like you think in a glider. You know, these gliders that go around the world. There's super long wings. And it's just more efficiency, right? It can handle the carbon fiber. You can make these wings go way out. They're very light. They're very efficient. And then they're high enough with a truss brace, like it's buttress, like you think of the Notre Dame, how the buttress sits there and it braces that wing. And then they can get a lot more range out of that as well with the carbon fiber, which is much lighter, like companies like Excel that we own. And we're also, it's not in our top 10, but we're large owners of GE that are going to be making these next engines. But in the meantime, they can't make enough of them. I'm sure you've read about all this. GE and GE and Pratt & Whitney, Raytheon, they can't build enough of these narrow-body engines, so it's a long pole in the tent. So what's that do? That actually benefits our businesses as well because they have a lot of aftermarket exposure. So all these engines that were planning on coming off wing because they were less efficient, they're staying on wing longer. And aftermarket components are a higher margin, right? You don't have to build a new one. You don't get negative return on all the input costs and the IP and the R&D that goes into it. You just get to run a CFM 56 engine on for how many more 1,000 hours, and they go forever. And they have all these replacement hot parts of the engine that need to be replaced. And companies that we own like Heiko and you name it make these. Make these parts. So that's a great question. It's exactly what's going to happen. There's going to be a replacement engine at some point, but in the meantime, we'll benefit our portfolio, our GCAD portfolio will benefit from the current systems that are out there. Sir. Thank you. He said, "Thank you for your service." Thank you. It was an honor. It was a privilege to do it.
I'm glad to hear that you think Boeing is going to find its way back. I think if we lose Boeing, we lose a great company. Do you think, though, it could shed the parts of its defense business in the future, maybe unwind the McDonnell purchase? That was my first question. My second question is, do you see hiring of college graduates in the aerospace business today?
Boy, if maybe I'll go first question first, but second question just as important, if not more. First question, defense. Does it make sense for Boeing to be a defense manufacturer as well as a commercial? And my answer to that is I think it does because first of all, a lot of defense platforms have the same motors, like for example the P-8, which is the main the sub hunter for the fleet, is a Boeing 737, and it uses the same LEAP motor and it uses the same frame that Boeing makes. So the engineering is very similar. There's a lot of overlap. All the IP, just the technology. I mean, you can imagine where a company. I'll give you an example. A company that we own, and they just did a spin-off called, and I give a bunch of these actually because it's what we like to do. A company called Crane. They make aerospace and defense components, microwave systems, anti-lock brakes. They also had a payments business, just an old conglomerate, right? Conglomerate from a different time, and they spun that off. There was no overlap. There's no reason, no synergies between those two, and it made sense. And then the analysts that follow the aerospace industry can follow Crane Aerospace, and the analysts that follow the payments business can follow the payments. And they actually both did very well. It was a huge. It was 100% IRR. It was 100% return for Crane last year for us, somewhere around there. But I think Boeing needs to be doing both. They're leaders in both, obviously, and they're just huge parts of the business. I mean, most of our fleet on the defense side is a Boeing aircraft, an F-15, F-18s. So I think that's important. And then secondly, and I could go into a lot more detail on that. I don't want to anchor down too hard, and I'd say secondly, the most important thing I think is right as the STEM education. Everyone always says, why would you want to go into technology? And it is right. It's hard. Like being an engineer is hard. It was painful. I I have a minor in math, which I didn't want because I had to get it in order to get an engineering degree. So it's hard, but it's rewarding, and I just think it's how the future has to be. And hopefully, I talked to all these companies. I went up and talked to Moog. They have a center of excellence up in East Aurora, New York, where they're headquartered. They work with the University of Buffalo, and they're focusing on getting these new entrants, just like you're talking about with issues at Boeing. And that was a big problem with Boeing with COVID. A lot of the industrial knowledge, the historical knowledge, was lost when these people retired during COVID. And building a 737 is not making a chocolate bar. It's a whole different animal. It's complex. It's variable. It's not. You're not building a Ford F-150, which is essentially the same system. There's like 8 different, just on the 737 9, MAX 9. There's like 8 different variants of that. So it's complex, and it's hard. That's why it's a very difficult thing to do, and we do need we're going to need a lot of technology students going forward. That's the end game. So good question.
Thank you all so much for your time. I think we're actually coming to the end of the session now. But if you're interested in learning more about Tony's strategy, there's some folders on the seats, and we'd love to continue the conversation back at our booth. We're on the other side of the Morningstar Center, just over here. So thank you again, and look forward to seeing you throughout the rest of the day.
Thank you.